So the purpose of this conversation is at a very high level is to discuss the state of regulation in the micromobility industry. And then from that, understanding, of course, how to be as excellent as possible in complying with regulations. And then specifically, we also want to talk a lot about identity verification and KYC and how that helps you, of course, scale your micromobility fleet. I'm joined by, of course, three companies. As I mentioned, ID Now, Super Pedestrian, and Joyride, all leaders in the industry in their own respects across things like KYC. With Joyride, of course, one of the largest providers of all of the operations around shared micromobility that you would need as a provider. And then with Super Pedestrian, one of the largest actual shared micromobility providers in the space. So to start, they all have one slide, of course, to introduce themselves and their company, and we can start there. So Edward, you want to go first? I'll pull up my screen here and share my screen and discuss a little bit about ID Now.
Yes, thanks, James.
Yeah, you're welcome.
Good afternoon, ladies and gentlemen. I'm delighted to welcome you all to today's webinar. Just wait for the next slide in 1 second. Yes, so my name is Edouard Bossier. I'm the Mobility and Travel Sales Director at IDINO, a European leading identity verification company. First, allow me to introduce IDINO. So IDINO was founded in 2014 with the main objective of providing compliant servicing to all the European requirements when dealing with remote customer onboarding. We were mainly focused and driven by the financial services industry at the beginning due to their high requirement in terms of regulation. But now, step by step, we have seen the emergence of new regulation in other industries. So in concrete terms, we provide software as a service solution to verify documents and identities in real time, to electronically sign documents, and to offer reusable digital identities. We have offices in Germany, France, and the UK. I'm personally based in France, in Brittany, and we are around 450 employees. We have 900 international customers on different industries, for example, banks with UniCredit, BNP, or Crédit Agricole. Also digital champions like N26, Klarna, but we also operate in hospitality sector, fintech, crypto, or gambling. All are also regulated. And last but not the least, we are more and more active in mobility industry with the following customer. You can see on the slide with 6, Tier Mobility, BP, Vive la Car, Virtuo, or Citigo. Happy to share with you some insight today.
Great, thank you, Edward. Next up is Jared with Joyride.
Hey all, good morning. I'm here in North America in our Canadian headquarters in Toronto. My name is Jared Goldlust. I'm the COO at Joyride. Joyride's the world's first and fastest micromobility software platform. We were founded in 2014. And since then, we've just been helping entrepreneurs, companies launch their fleets. We have over 200 operators on our platform. We provide custom consumer-facing rider app, field operations, backend, fleet management software, hardware agnostic vehicle integrations, IoT integrations. We do long-term rentals, various payment gateways, various ID verification, and a whole slew of features that really speaks to operators around the world and their needs. So that's who we are. We have offices around the world, and yeah, I'm excited to be here and talk a little bit about IDV and regulation.
Excellent, thank you, Jared. Let's go to Haya with Super Pedestrian.
Great, thanks, James, and good morning to those in the US. Good afternoon to everyone in Europe. Thanks for joining us. I'm really excited to speak to all of you today. So I'm here on behalf of Super Pedestrian. I look after our business and policy globally. Super Pedestrian was spun out of MIT back in 2013. So we've been around for a little bit more than 10 years, actually. We hold the most number of patents in the industry in AI and EV technology. And we have our own hardware. We took around 2 years to actually develop what we believe to be the safest and the most advanced vehicle in the industry. And we started launching with shared scooter fleets back in 2020, and we've been expanding since then. We currently serve around 65 cities around both the US and Europe. And in Europe, we're in 8 countries. You can see the names there. And yeah, really excited to join and talk about regulation, which is a topic that's every day, every morning, every evening is top of mind for me as I kind of lead our business globally.
Hi, one question on super pedestrian. How does a consumer think about Link versus the super pedestrian brand when you see them out in the streets?
Yeah, actually, James, that's a really good question. And I think it has been a source of confusion. When we first launched our vehicle, we launched it as Link. So Link by Super Pedestrian, but we did actually rebranding quite a while ago, more than I think a year and a half ago, to all the scooters are now Super Pedestrian. So if you look at the photo, the third and fourth one has the S branding, and that is actually how we're going. So Link doesn't really, let's say exist anymore in a way, but there are still some Link scooters. But I think eventually, for sure, they kind of fade out. So the branding is really that S, that Super Pedestrian. Initially, we decided to go with a different name because we thought Super Pedestrian maybe is long, or we were planning to launch a lot more products and have them be different names. But then we decided actually, even if they're all Super Pedestrian, so that's the brand for the scooter as well.
Awesome. Great. Thank you. Okay, well, to everyone there, thank you so much for sharing more about the company, and hopefully for everyone listening in, that gives you a good baseline, of course, of these amazing companies and how we're going to be able to how they can help us frame this conversation. I'll just say very quickly, I'm James Gross. I'm the CEO and co-founder of Micromobility Industries. We help bring the industry together. I remember when Super Pedestrian launched at our event many years ago. Jared, of course, seeing all your changes and launches that you've done over the years at our events, and of course, working as well with ID Now and Edouard. And it's great to see the industry continue to grow and flower and change. And really, our goal is just to bring it together as much as we possibly can. So diving into the topic at hand, as a micromobility industry, I think we continue to see how regulation is shaping our industry, and of course all the companies as part of that. And so what we'd like to do today, of course, is talk about regulation and then get into specifically some of the products of regulation. So to start, I think the first thing to kind of throw out there and talk about is, are we seeing regulation in micromobility drive innovation? I'll just open this up to everyone on the panel. Like, I love all your opinions because you see different slices of it. But do you actually believe that regulation is making our industry better and driving it to be a better product for the end customer? If no one wants to start, I'll pick Haya. Maybe I'm curious to see what she believes first.
Yeah, that's a really good question. I don't think there's a one answer. I think that regulation could actually definitely drive innovation, and it is in some cities, helping or at least basically enabling innovation. But I think in many, it's unfortunately not the case. And I would say the main reason is regulation has been very heavily, when we talk about shared mobility, focused on actually mitigating for the risks rather than actually opportunities focused regulation. So we rarely have conversations with cities that says, how could we enable a scooter program that is actually for everyone? How could we enable more people using scooters? How could we make the road safer for everyone? How could we actually maximize the benefits of the program? Could we actually achieve a 10, 15, 20% mode shift in 2030 or 2025 or whenever? That is not the conversation we have. It's usually all about, what is the risks? What are the limitations to the program? And in most places, it's very much focused on mitigating for the risk. And it means actually trying to curb the program. And it causes two things, I guess. One is on the revenue side, you limit the number of vehicles, you limit where they are, you do a lot of limiting to the demand, and demand goes down in most places because of the regulation. If you leave it more openly and free, it's actually demand is very high. Scooters are very popular, and lots of people love to use them. So we don't have an issue in the industry that there is no product market fit. That is not a problem. There's a great product market fit. The question is, do you limit in a city that could, have anywhere between, I don't know, 5 to 25,000 scooters? You put only 500. Yeah, of course, you're going to have only demand for 500 because it's not as available. And then the other problem is on the cost side, you add all those layers of cost where, what you talked about pre kind of going live, then it makes the industry look like it's not profitable. It is actually a very good industry. It's very healthy. Demand has never been in a healthier place. I think lots of cities are opening up and there are a lot of positive signs, but costs are kind of artificially, I would say, in some places high because of partially some of the regulations, partially because of other things. But I think that some of the signals that the market is giving is not representative of the industry and its potential. And I think if the sentiment stays very negative, then there is no money flowing into the industry. And the question is, how do you innovate without money? How do you innovate if you cannot have your R&D? We have our engineering team based in Boston. We invest a lot in R&D. We're innovating. But if we don't have more kind of positive investor sentiment, how do we continue to innovate? That makes it very difficult, right? You have to then just focus on the bare minimum, where I think actually it's a very, very, very young industry with huge potential, and it should be given a lot more opportunity to kind of flourish and really work on maximizing for the opportunities, also mitigating the cost, but the risks, sorry, but you cannot do that without flowing of money. So I think there's I would say bad, sometimes in some places there's a bad reputation or there's a risk associated with shared mobility, which actually is very contradictory with how much there's the product market fit and it actually really works and people love it. And I think it has huge potential as a very concrete thing, very concrete. This is why I love what I do. I fail to find another thing that is as concrete as scooters in terms of actually mitigating climate change, and something very concrete that could actually get people out of cars, that could help our cities be less, congested. And that's why I love it. But on the other end, yeah, there's that potential, that we need to achieve. And for that, we need the right regulation in place. And I think we see a mix, but overall, I think we're still very far from having a regulatory environment that's actually enabling innovation, enabling growth at the potential that you and I, believe in.
Yeah. Okay. So yeah, I think you did some really good framing there that I'll try to also point out, and I think it's also just important for framing the conversation. So I think what so much of what Haya said there is, in entrepreneurial parlance, like there's real product market fit. There's a lot of people and a lot of demand for vehicles and a lot of growth in the industry. I mentioned to the panelists before we got on, but TIER just put out their kind of annual state of things to an investor group. The presentation is now live. Praveen Joel Jones on Twitter just kind of covered it, and their growth over the last couple of years is quite nice. It's 130% compounding annual growth rate, or CAGR. Which again, if you looked at that on the surface, you say that's amazing. This is a company going in the right direction. At the same time, they did about $112 million pounds in revenue. They did $77 million in losses though overall. And as we know, with the interest rates in the market currently, that can't continue. I mean, the company will be out of business, and I assume the next couple of years, based on the cash on the balance sheet, which I'm not totally in purview on, but I might be able to find out in that presentation. And so, and then if we look at the public markets, which are ultimately a proxy of sentiment for companies and how they'll do, we have shared micromobility companies that are now public. That would be Bird, that would be Marty, and that would be Hellbiz, micromobility.com it's called now, on US exchanges. These companies are worth less than their cash, meaning basically the market is saying you're worth more dead than alive, which is like ultimately a very bad signal for the industry, right? Like the market would rather see them give money back to the shareholders than continue to operate. So that's like the exact opposite of product market fit, right? So what's going on in a world where we're seeing scooter growth continue, where people are clearly picking it up, wanting to ride it, but these companies are losing so much money that the market is demanding basically to give the money back. Stop doing whatever you're doing and give it back. And that's kind of that's where we're at right now. And so one of the major areas we could blame, if we're blaming people now, which I don't know if we want to do, but would be regulation, would be this idea that we've created a situation where these companies can't possibly be profitable. And so, Jared, I know you work with a lot of, a lot of providers, probably the most providers. You might have the biggest scope of purview over shared micromobility providers in the world. What are you seeing? Is this something that you're seeing, or are you seeing companies that are going to be able to play within the regulatory framework that currently exists and actually make it out profitable, or make it out to a place where the market will reward them for whatever success they're having?
Yeah, so I think it's interesting. Like some of the themes that we're seeing is very similar to Haya, right? At the end of the day, we're very much in the infancy stage of this industry. Unfortunately, you would hope after, 6-7 years, regulation would be able to, with something that has a product market fit. And we're clearly talking about scooters here and not, bikes, e-bikes, and that type of thing. Because, you go to city councils right now, they'll tell you put out as many bikes as you want, essentially. But for scooters, it's very different. I think what we're seeing is there's a few different styles of cities, right? There's the small to mid-sized cities, where some of them, it's kind of a free-for-all right now. And it's kind of like, there's not, a lot of the big companies don't want to go in there because the markets are just not large enough for them to operate. But for a lot of the local operators, like we have a number of customers that are obviously local, small, mid-sized cities, they're local, they started out there, they just started putting out scooters, they have a relationship with their city councilor and things like that. And, they're kind of operating as is. As time goes on, they start to get more and more questions, more competitors enter the market. And then the city says, hey, we need to start regulating this a little bit more. They get more complaints and things like that. And so, unfortunately, we're still a lot in phase one of this, where it's more of an existential kind of conversation, legal, illegal, and we're just, advocating to like for our place in cities. And so it's very hard to talk about innovation when you still don't know for sure whether you're going to exist there or not.
Yeah.
For the cities that are more progressive, liberal, and are really focused on this idea of, hey, we need micromobility in our cities to really, from a sustainability perspective, from congestion, traffic, and to get people around the city. The good ones are really focused on collaboration at the end of the day, right? And it's not a top-down approach. Hey, these are the regulations, you either abide by them. And that's usually cost prohibitive for the companies. And this is why they're struggling so much, is because the cost associated with regulation is just so astronomically high that, most of our customers, for example, just don't have the budgets to really lobby and to really work with in a collaborative way with cities and regulators on this. The few areas where I guess we started to see a little bit of innovation are the things that are really important to the cities, like around parking, sidewalk riding, and those types of things. And so there's little snippets of innovation happening around there, whether it's, super pedestrians, scooter in terms of like, more precision around, sidewalk riding and things like that. And there's different software providers that we work with, like Aluna and things like that, that really help on these things. But that's where we've seen glimpses of innovation, I think. But we're still, I think, in most cities, still at that like phase one of figuring it out.
Yeah. Okay. And I want to get into where regulation can drive innovation here in a second. But I want to, Jared, I want to pick on one of the points you made there, which is, kind of, and again, maybe this is a little bit of a US centric view, so I'd love some European comments too. But, this idea that shared micromobility is more welcome in liberal or progressive cities. I would agree with you in theory, but of course, what we see in a lot of those liberal and progressive cities, and I would say on the larger side, are also a sort of a political will to decriminalize things like theft, of course, have huge issues with overall. So I just wanted to pick on this idea because again, I think this is going to lead into a regulation conversation, especially. But what we see in, I live in California, so we have large cities like San Diego, Los Angeles, San Francisco. You've seen a very big increase in crime, homelessness, drug addiction, and you've seen a lot of city leaders who have started to become much more lenient on things like wanting to decriminalize theft, wanting to decriminalize certain misdemeanors, to the point where, again, scooters and bikes are a good example on the streets where you see the wheels off of them. You see a lot of a lot of theft, a lot of vandalism, and what seems like a government that doesn't want to enforce rules and laws around them. So I'm just curious there. How as an operator do you survive in a city where they decriminalize theft and vandalism?
Yeah, so I knew once I made that liberal city comment, I was like, shouldn't have gone that way.
It's okay that you did. I think that's a common perception. I'm just curious, like just digging a little bit deeper there, because I think this leads to a lot of regulation that we potentially need. A lot of, for the scooter providers, for people to say, hey, come to our city. Oh, by the way, we don't criminalize theft and vandalism. Like, what are you supposed to do with those, precious vehicles that you have all over the road?
I mean, the reality is companies can't survive if those kind of things are happening, right? The micromobility companies, just operators, cannot survive if their fleets are being thrown into rivers and being vandalized. And so, I mean, that's where ID verification is a little bit more vital. But especially if you're dealing with the lower class, and is scooter riding a little too fringe and too welcoming, I guess, to kind of the lower class, which are more likely, to be doing this vandalism and theft and things like that. And so I think it's not sustainable for cities, and they just won't have programs because all these operators will pull out of those cities because they just financially cannot survive there.
Yeah. Hi, sorry. I know you also had some points there.
No, I can just add something there. I mean, I think that this is just an example of an area. I mean, luckily, it's not a big problematic area for us, at least in most cities. And I think, as you said, Jared, like operators are willing to pull out of cities if there are issues that makes it, non-profitable. We're actually unit economics positive in all our markets, and we're heading towards profitability. So just to answer your earlier point, James, it is possible to be profitable despite all the regulation, but it meant we had to be selective in which cities we operate and which cities we don't operate. So we don't operate in every city, and we're very selective in terms of which cities we work with, and we work under all different regulations. So we work under tenders. We won several tenders across both US and Europe. We're working under MOUs. We work in open markets. We work in exclusive cities, big, small. I think it's not like there's one sort of regulation fits all. That is not the case. When we talk about regulation, it's more about the city wanting to have micromobility and willingness to basically collaborate with us. To solve issues as they come, and to actually look at it both from a user perspective, from a all the general kind of population living in a city and all the users of the road as well, but to be able to do that collaboration. And in some cities, you talk about the theft and that vandalism as an example, they would say, oh, okay, not our problem, actually, you deal with it. And on top of that, they penalize you on other areas. And when we talk about innovation, just one comment I wanted to make, I think it's also innovation has been framed the wrong way in the industry, because we're not talking about innovation that drives the industry forward. We're not talking about streets. When I envision a city, I just envision huge lanes of micromobility and all sorts of new vehicles. Every time I go to one of those conferences, I see all those micro vehicles, and I'm like, this is amazing. I could see the future city looking absolutely wonderful, clean air, not a lot of pollution. But that's not what we talk about. We talk about very specific, very limited, even just kind of trying to solve for very, very small issues and not really driving demand, and in a lot of times making the user journey or the user experience more complex, and so driving the demand downward rather than upward. So I think this is the problem. What do you innovate for, and how do you frame innovation? Are you innovating for more people to use those vehicles? Are you innovating for the hardware, or are you just trying to add features to address certain things, and putting too much pressure, I think, on, on operators, and too much responsibility? So I think this is where it's like also we have a role as operators to educate, to cooperate with cities, with riders, but we cannot be blamed constantly for like one singular instance in a million rides. And sometimes I find it very funny because you don't look at it from a data driven perspective to say, actually, okay, there was one scooter accident in a million rides. That's actually very low. But you say, oh, there was a scooter accident, should we ban the program? I'm
Yeah.
like, how did we get there? Like,
Yeah.
how did the conversation get there?
Yeah, totally.
Yeah.
I had to go back to the criminal issue and the theft issue and do you feel like you've pulled out of cities because they don't have a good enough solution to crime?
I would say we haven't pulled out of cities for that singular reason. We've pulled out of cities where there was a high, we haven't pulled out of lots of cities in our history of 3 years of operating. We've pulled out, I think, 3 cities in total, maybe 4, out of like 70, 80. I would say we wouldn't pull out only for that, but if we see that there is no long-term vision for how we can solve vandalism or theft, and the city is not cooperating with us and they're not being flexible on other, like, let's put an example. They want to charge us high city fees and scooters are being stolen, without naming specific cities, and they want us to implement opinion features. So it's like, okay, this and this, there's a P&L. A lot of times I put the P&L on a screen and I try to take the city through it, and if they show zero interest in understanding our unit economics, then it's very hard for us to to have the conversation. I think if they're willing to have the conversation and work with us and collaborate with us, we usually don't pull out. The only reason we would, if we see, okay, there's actually no, not even in 2-3 years, things are not gonna change. Luckily, that issue of vandalism haven't been a big one for us, but because we also look at it pre entering the market.
Yes.
So I would say we've not entered certain markets that we think this would be a big issue.
Fascinating. Okay, yeah, I'm very curious on that idea. So that it's not a huge issue based on, again, just what we see in the carnage that we see and the amount of losses that we see from the companies that are public. Like, I wonder, it seems like they're losing a lot of money to vehicle theft and vandalism and
I think it has to do with our hardware, actually, partially. So
okay, so you think you've innovated a solution, non-regulatory solution, just a technical
non-regulatory solution. Yeah, and our scooter is very robust. It's very hard to steal, and it's quite it's difficult to break. So I think I believe we have the lowest from what every publicly available and what I've seen also in in the last few years. I think we have the lowest theft and vandalism in the industry.
Excellent.
Yeah.
Okay, that's
good, I guess, in a way, but it's still, you're right, still a problem that for some places I think it still happens. But I do think in general, if you look at like statistically over the last few years, it has decreased a lot, because what happens when scooters are new in a market, you see more vandalism, you see more theft, and then it kind of slows down. So I would say, like, it's not a long-term issue for the industry, it's more
okay.
And
well, okay. So, Edward, I want to bring you in here. So clearly, you have companies across the mobility spectrum. You had it in your slide. Some of those companies are shared scooter companies. Some of those companies are rental car companies, and other ways that you would, of course, need to identify who your customers. Can you speak to at all the difference that you see across mobility verticals in terms of the compliance of KYC and the potential theft and damage that happens to, say, a rental car versus a rental scooter?
Yeah, so KYC here is a tool that can help the operator, provider, car rental company to measure their risk, because at the end, for example, in micromobility, I'm quite convinced that adding IDV, so KYC process at the beginning, can responsible the user, because they are identified before riding on a scooter. It's the same when you want to rent a car, for example. Fully digital, when you had digitization on top of regulation, you need to know everything about your customer, because there is no face-to-face. 10 years ago, when you have to open a bank account, you have to go directly to the agency in face-to-face to talk to people with your paper, etc. Now, with digitization, we can do everything online, and meaning online, we have no trust, no face-to-face. And with KYC solution, we can build this trust, this remote trust at the end.
And so with that, so for instance, someone rents a car. Do you have a sense of like what the vandalism and theft and issue rates is for renting a car versus renting a scooter? With the idea that is there any implied penalty because of that KYC process, or is it just because you have to, the insurance process a little bit more rigorous than renting a car, let's say, than a scooter? But I guess I'm assuming that rental theft and damage is lower on a car than a scooter. And, why is that? Is it because the consumer doesn't think they're as responsible? Is it because the consumer knows they're in a little bit more trouble if they crash a car versus a scooter? Do you have any sense there?
Yeah, for me that totally the case. A car is not the same as a e-scooter. E-scooter is the same for me as a scooter. It's a derivative. It's an electronic device, and so it's perceived as a toys for everyone. We at the beginning we saw e-scooter appearing in our cities, and we say, okay, we can register only with a credit card, and then I can play with it. No, that's not the case. The idea was to make some good thing for climate change, and without the first rule at the beginning to say, okay, it's a material, you have to take care of this, you are responsible of this. The cities was not there to provide the right messages, in my opinion. And for car rental companies, they are providing some car for people, so they have to make sure that the person who renting the car remotely without face-to-face have some driving license, the real license to drive the vehicle if it's a truck or a car. And at the end also make sure to identify that it's a real person and not an identity theft. And it's more on the fraud part that we can address with KYC solution.
Yep. And so I guess to Jared and Haya, this kind of and we're getting some good questions from the audience that I want to get to too. So thank you for submitting those and we'll get to those. But Jared and Haya, on the regulation front, do you know of any providers that have actually gone in to try to drive cities to do more enforcement of theft and damage? Let me give you again another example. So in Europe, I know, of course, like bike theft is a massive problem. And again, if we're serious about, for instance, these smaller electric modes being able to shift people out of cars, it's striking that while we say we're serious about that, when you steal a bike, an e-bike, doesn't matter, it's generally considered a misdemeanor. If you steal a car, it's a felony. It's a grand theft auto, for instance. Here in the US, penal codes are much different. Penalties are much more severe. Do you know anyone lobbying in the shared micro business for more stricter penalties of theft and damage like you would have with the regulation capture that's happened with automobiles, and how, of course, the police enforce automobile theft and damage? Jared or Haya, you could either any stories there.
I'm first on that. Not really. I mean, at the end of the day, it's more costs on them. And so I know if you look at the big picture, well, if you lose, certain number of your fleet of vehicles, then you're going to have to replace that, and it's going to be more costly in the end. But the challenge with this, especially around scooters, is, we want to have our cake and eat it too, in that we don't want to, operators don't want to spend more. They just don't have the economics. They don't have the room to really be spending $1 or whatever it may be per ID verification. And on the consumer side, on the rider side, they just want to take a ride, downtown in their area, and they're not, purchasing a home, they're not opening a bank account, and they're like, why am I providing my, I take these city bikes, I don't have to provide an ID verification. Why do I have to do that here? A lot of the cases is like, hey, I actually don't have my ID on me. And so it's a challenge. And then on the operator side, they're like, really, most of our operators that do ID verification are only doing it because they're forced, which is a shame. We really try to push it because I think it's really important if you really want to know your customers and do that properly, and know who's vandalized or know who last rented it and things like that. Really, the only way to do it is through ID verification. You can't have a sign up that is, sign up for our app and it's 1,000,001 questions, because the friction is too high, and then they'll just go to the next scooter over there. And so I think there's, none of our operators, or most of them, would not lobby to the government to sort of say, hey, we need more regulation around this. They
Sorry,
might.
Jared, but on that point, like the government's saying, hey guys, you need KYC for whatever reason. Why
Yeah.
not go back to the government and say, okay, we'll do KYC, but you need to, when something happens to my vehicle, Joyride, I know specifically, I've talked to some of your colleagues, like you go to the police and say, hey, we have details here that people are damaging, destroying.
Won't help, James, because usually the ones that vandalize, they're not the last riders. They usually hack the vehicle, so that won't help. Sorry to
Oh,
jump
sure,
in.
no, it's a good
That
point.
won't,
So
that won't
the idea
help.
that
That won't help. No, the
okay,
vandalism
vandalism and
happens
theft is
without,
not.
no one is gonna upload their ID and then steal a vehicle. Like
Okay, so why are they?
they
How are
hack
they
it.
able to steal the
They
vehicle then?
hack it. They hack it, and that's why I'm
Yeah.
saying for us it's not a problem because it's not possible to hack it. They hack it, and that's why, to answer your earlier question, are companies spending money on this topic? No, it's not top of mind. The reason is because the vehicles became more, if you look at the earlier models, the ones that were deployed 6 years ago, they were so easy to steal. There was a hack, there was a YouTube, it was, super easy to break, and not very sustainable. So now is not the case. So not just super pedestrian, but also the off-the-shelf, big brands that produce scooters, also they're not very easy to hack or steal. So I think the solution was more hardware rather than forcing the cities to cooperate.
So, hi, just on that point though. So, like, just using I'm picking on Voy here because they just publicly disclosed numbers. Voy is losing, they literally need to find a way to not lose $60 million. Where's that money going?
So I think there are two things, actually. I think partially, so, in the beginning of this conversation, we said we're going to blame regulations for the profitability. I don't think it's only regulations. I think there are two areas, maybe three areas where it affects the unit economics. I think one is regulations. The second is actually cost structure of the companies. This is an industry that needs to be frugal. This is not an industry that could pay, high salaries and have layers of management and McKinsey, graduates and ex-McKinsey consultants, working in every operation manager position you could think of. So I think that the industry initially, really was on a, very much a hiring, growing, lots of high salaries, etc. And I just don't think that's sustainable. So I think that some of the operators still need to kind of put their costs under control. And the third one, so it's cost, it's regulation. Cost by, central cost, right? Because at a market level, we're profitable in every market, for example. And we're actually, even at a much smaller scale than Lime, we will be hitting profitability. So we don't, it's not, I would not say, like, the margins in the industry are very good. So the third one is really choosing the cities that have good margins. So I'll give you an example, like in the UK, without naming specific operators, but lots of them went and promised crazy rev share to cities. Scooters should not have rev share. I will say it openly. I don't mind if cities are hearing me here, but it really shouldn't. We're providing a public service. If we need to, pay certain small costs, it's okay. But there are programs in the US that are €1 million a year to operate. That's just crazy.
Yeah.
There
Okay.
are programs in the UK that were quite a significant rev share, and rev share is not profit share, right? I'm okay sharing.
Well, rev share is generally corruption, right? It's not something that's supposed to happen.
It's very challenging. And going back just to one point on the ID, okay, some cities would require the ID verification. We have to pay €1, fine. But imagine if a city requires the ID verification and very advanced technology that costs map that are in the hundreds and thousands of euros, and and this and this and this, and then every time there's a scooter parked incorrectly, okay, we're going to fine you €120, not the rider but you. So if there are cities like this is not manageable. So this is why we choose the cities very carefully, and we need to have very honest conversation with them from the beginning. And if they're moving in that direction, then we have tough choices.
A couple things there, Haya. So on that last one, the city, the vehicle is in the wrong place. We're going to find you, not the customer. If I rented a car and I parked it, I don't know, on top of City Hall, I'm fined for that. Ford is not fined for that. Avis is not fined for that. Why are you fined for that? That sounds like it's an identification problem. That sounds like it's a regulation problem on identification. Why on earth would you be fined for that?
Yeah, it's a very good question. And I think this is where, ID Now or other companies, this is where it actually brings value rather than just being a cost, for us. We're fine for that. We're expected to pass it to riders. It's not always possible to pass it to riders, and it shouldn't be
Why?
our, responsibility. Like when I rent a car, if I get fined, I just get it directly to my home address and I have to pay it.
Or, I mean, not always, right? Sometimes the rental car company, has the toll meters and they, in the agreement,
Sometimes
say,
the,
so you guys
the
haven't solved that though?
No, but the fine has to be corresponding with the price. Like with a car rental company, you don't rent a car for 500 euros and then get fined for like 10K. They don't have enough credit on your credit card to fine you for that. Like think of it
Right.
this way. So
But
it
it's
has to
tied to
be
your
corresponding.
license. It's then sent to you, right?
Yeah, but it should be corresponding with the price of the ride so that we're able to charge it if we're going to charge it directly from the card or whatever.
Why? I mean, it's a crime. It's, like whatever happened,
If
part of
they
your
enforce it
complaint.
in that way, but what if we can't pass it and,
But
then
that
we end
sounds
up.
like, okay, but that sounds like something you have to figure out in fairness. Like that's not the regulation. The regulation
Oh,
is,
no. I'm just saying, if the credit card from the person doesn't work, what do you do?
don't take their credit card unless you could take a larger draw against their credit card to know that they could.
You know what happens? Drop in ridership. I would love to show you the data of what happens if we increase that
Sure. Oh, I don't
that
believe.
hold. I would love that. Like seriously, it's like the hold, even if we increase that hold by 5 euros, ridership and registration drops like crazy. People don't like it having a hold on their card. I would never be
Okay,
able to hold
so
120 euros for you to take a 3 euro ride. No one would want to take that ride.
so then that might be an issue where you need to go to the city and say, we know some of our riders are going to create fines. We can't cover them. We need to be
No.
able to pass them on to the customer. Where we can't pass them on to the customer in a legitimate way, we need you, the city, to create a pool where you're going to actually cover some of these costs. Which, just to go to Dorothy's comment here, who says basically, there is in terms of fleet management, there's theft and vandalism. The government should be a good partner in subsidizing membership potentially to help with that. And so I'm just curious. The crux of the question there is where are the subsidies coming from the government? It sounds like and I've seen these reports on basically cities shaking down shared micromobility providers for rev share, which I think is entirely unethical. But are you seeing any trends that actually cities will start to subsidize some of your costs, some of your technologies, like KYC, anything else? Is that a conversation that's on the table?
I think so. So I guess like also to go back to your previous point, the main word here is really having that collaboration, that discussion. So if the city is, wanting to do parking fines and comes to us and say, let's design a program that works for the riders. Let's think together. How do we do this? What is the right amount? How do we pass the fines? What's your technology enabling you to do? What happens if it, and that's a whole different conversation. That is fine. That is not a problem. The problem is when it's more like imposed and without the discussion. And I think this is where the regulation is really about the flexibility and having the discussion with us in terms of like, what works, what doesn't. And this is where subsidies come to play, or where, other discussions come to play. We have cities where we can have discussions with them openly saying, listen, this is the program. If you want this, can you cover some of the costs? Or, if you want that, then can we have more vehicles to deploy in downtown area where we can make more money? Or, having that open discussion to say, okay, we can do this, but we need a more attractive program in place. And we have that in most of our current markets. But in some, if that discussion is not there, then yeah, definitely the subsidy is not on the table, nor the conversation that you just said about the parking fines. So it all comes down to, do they view scooters as transport, as essential transport, as potentially even a public service that is actually helpful? And do they want to enable a program to be successful, or do they see them as a problem that needs to be managed? So are you seeing it as transport, or are you seeing it as problem? And this kind of frames the discussion and frames everything that comes, after. So I have cities
And I guess
that really care lots about the
skeptical.
program, and they
Yeah.
are like, yeah, we really want this to be very successful. Show us your ridership number. Like the cities that you meet with every month and present our ridership, and we look at it and we discuss it and we talk about, different things to improve, and we collaborate together, we invest in the city together, we do ridership programs, education, etc. These programs really work, and they end up being both profitable, high ridership, and very well managed. and the programs that are, you know, a little bit managed differently tend to be less successful. So it all starts from there. I think it really needs a collaboration, because we are operating in the public space and we are somehow offering a public service. So then that kind of partnership is just essential. It's not, you know,
Yeah.
we can't do without.
I'm skeptical of partnership. I've heard partnership and collaboration with cities for 6 years. You know, Bird used to say that, and Bird used to be worth $2 billion, and now it's worth 7 million. So I am very skeptical of what I want to hear more interesting stories about how there is real confrontation with cities, and how we're actually telling people who say that climate is important, they're putting their money where their mouth is and showing that they're serious. I think collaboration is soft and
It's hard. The confrontation is hard, James, because the thing is, who has the power here? And we have to think of it this way. So it's like cities have the power more than operators. So, and you know, confrontation is a very, I think it's not the right, like, that's not what you want. You want someone in charge of the program that want it to be successful. So it's not to, you know, be using collaboration as a buzzword or whatever. It is actually true. Like, I have a few cities that are so like into making the program works. That's actually incredible. And they're not even, you know, a London or a Paris or Chicago, but they're actually really interested in the program. And you see more ridership than bigger cities, because they're in it, they want it to be successful. So us forcing them, what tools do we have? Like, we could threaten them to leave. We've left some cities, yeah, they still haven't you know, wrote us and said, oh, we're sorry, come back please, we want the scooters.
okay.
They don't see
No
us
breakups
as,
have worked. Okay, so the
they
breakup
don't
strategy
see
is
us, no, they don't see us as essential transports. Those cities that are doing the regulations only to manage the risk and only to, you know, solve the problems of scooters, they don't see the benefits of them. And this is actually a big problem, that it's so individually driven by, like, does the person who's managing the program like scooters or not? And I just don't think policies should be personally driven to that level. Like, who cares if you like a car, if you like a scooter, if you like a bike? That's not how you should make your policies. The question is, look at data, look at numbers, look at ridership, and it's about the public good. It's not about, you know, do I personally like it or hate it. So currently it's very driven by the, you know, political agendas and the personal liking of this specific vehicle.
Brutal. Okay, so Jared, let's go to you. I think you have a very, again, large scope, and you know, one thing we've talked a lot about at Micromobility Industries is the smaller the market is, the more you actually have kind of you can come up with common sense solutions. The larger the political city council game gets, the more it divorces itself from reality and becomes about other things. So do you have any examples at some of these more hyper local markets where you're seeing cities actually showing signs that they're wanting to really help the scooter companies, maybe, as Dorothy asked, like with subsidies? And just curious if there's any trends in changing as, you know, as the money kind of dries up and people have, you know, the scooter companies have much less money potentially to work with and need to show profits much faster. Just curious if you have any good examples there.
Yeah, so I have one good example, one bad example. There's a smaller market, and this is the bad example. I'll start with that first. There's a bad example in a small market in Canada, where you know, essentially the city said, hey, you need to have X, Y, and Z by next week, or else you're thrown out and you lose your permit. And so they knew full well that the local operators couldn't actually comply, which is a couple of our customers. We actually had multiple customers there. And they were thrown out of there. And the bigger ones who already had that, you know, kind of features around, could have been, you know, around drunk riding or first-time riders or things like that. I mean, we have different features that work with those things, but it wasn't exactly to the spec that like they needed. So they created these policies around what the bigger operators are already doing, and it forced out some of the small operators. So that's a bad example. A good example, you know, smaller market in Minnesota, for example. Actually, I'll give a smaller market in Canada as well. I mean, I'm from Canada, so that's where I am. So I'm giving these examples, but these are happening throughout East Coast of Canada. You know, it's a bumping place in the summer, and it's one-stop shop there for, there's only one shop in town. It is he is on the Joyride platform, and he's working with the local police on underage riders. And so he actually does do ID verification. And another big thing for them is helmets, right? For scooter riders. So they've been pretty aggressive, like the police and the city there with him, because it was like a little bit of a free-for-all for 1 year, but now they're working actively with him on like, okay, when are you going to get the helmets installed? And now, we did a brand new helmet integration with him. So now they have helmets, now they're doing IDV. And so they've lifted some of the like kind of restrictions that they were having on him and kind of working collaboratively with him on that.
Okay, that's good. But how about just even more aggressive, right? You hear the rhetoric of, hey, we want to do things, we want to build a more sustainable city, a healthier ecosystem. Like we're gonna actually pay you to come into the city. We're gonna actually subsidize theft. We're gonna actually pay for all your education materials. Like any shift there, any tonal shift there at all over the last 4 years?
I haven't really seen it, or at least one doesn't come to mind. Similar to what I was saying.
I have one example. I think if I have more, I have one from the UK. We're in Nottingham. The city is really collaborative. They actually just paid for all the parking racks to be installed. So they've asked us for parking racks. I explained that we're more than happy, but we can't pay for them. We're very happy to use them and add them to our app and all of that. So they've actually paid for it. They've also subsidized us to have a community officer to engage with the communities, which is a role like they wanted. So that was last year. So they've done a few things. Every time, we kind of discuss, okay, what can you pay? What can we pay? We've hosted events, done education. They've kind of co-sponsored those events. So they've been quite collaborative from that perspective. I do think it's, going back to the earlier point I made, they see the success of the program and they care about it. We see more cities that really care about the success of the program. So I do think there is movement in that direction.
What's an example, Haya, like very specifically, when you say they care about the program? Ensuring success, subsidies, like what's
subsidies, or paying for some of the elements of the program. Like if you want parking racks, you'll pay for them. We see more cities having those discussions, or paying for certain education events, or even certain positions, or certain things that they actually want to see. We see more of that. I think the problem is that the landscape at the moment is too messy, the competitive landscape, and it needs to slow down a bit. So I think that, with more kind of, let's see where the industry heads, with maybe more consolidation, more kind of, things slowing down a bit, and more clear landscape, that should be okay. Because I think we have been our own problem in a way, because the scooter operators have been very competitive. Cities didn't wake up and think we want to do rev share. Operators went to them and said, we can give you rev share.
Right.
So the ultimate one to blame is actually us, operators.
Yeah, sure.
Cities didn't think, I want to have drunk riding feature, Jared, to take that example. Most of those features, anyone can do them after a few drinks. I actually don't even know the purpose of a lot of those, and they cost a lot of product work, and and product is expensive. Product development is expensive, and you have to prioritize. And imagine you have 100 cities, and every city wants certain features. Where did they hear about those features? They didn't come up with them. Operators came up with those features and promised them. So actually, we're ultimately, to blame in a way. And I think once that conversation becomes more honest, like I'm a big fan of taking risk. I always tell the cities right away, like, this just doesn't, make a lot of sense. Let's look at data. I think once we have a more data-driven approach to this, and once cities say, okay, can I see some data around this? What does that mean for the riders? And once we talk a more rider-centric approach also, things change dramatically, if we take that approach. But so far, I think it's a journey. So I think next year will be quite a good year. Maybe not everyone will be here, but like for the ones that stay, I think next year and the year after will bring a lot to a lot of growth for mobility.
Okay.
I'm still very optimistic.
We're wrapping up here. A one-word answer for let's go with Jared and Haya and Edward. I'd be curious on your thoughts too. But so for Jared and Haya, it's 2030. Are there more or less shared scooter providers in the world? Yeah, the answer is more or less. Jared, what do you think?
Less. A lot of micro fleets, like micro operators, more of like an Airbnb type model. But in the model that we're in today, less operators.
Okay, but more overall, you're saying the Airbnb model is like, hey, we're gonna, it's 1,000 millions of flowers sort of blooming, but in very small spaces.
Yeah,
You
exactly.
mean more shared scooters, right? More vehicles or
No,
not?
I meant more operators. So, but I would consider
Okay.
the Airbnb in, the 20-person city to be an operator. So
Yeah, I guess I'm saying either the cities get more into it, right? And so
Yep.
that would reduce the amount of operators, and treat it more like a bike share program, and so there would be less operators than there are today. Right. That's a big piece of this, right? As you were just talking to Haya, like there's a difference of how cities have treated bike share versus scooter share,
yeah,
in that they've taken ownership of bike share in a more, in a stereotypical way of like they're driving the revenue there,
Yes.
sponsorships and that type of thing. And so on the scooter side of things, the only way they're getting revenue is if they're, putting their hand in the basket and taking out some revenue from the operators themselves, and they're doing the permit system. And so I don't think that is a fully sustainable kind of model. And that's why I don't see a growth in operators with that model.
Gotcha.
So yeah.
Fully
Okay.
agree with Jared. Definitely less operators, more rides, and also perhaps a view more centralized around mobility, like mobility as a service. So I want to make a full journey. I need to take several mobility operators, and for that, it could be a good thing to collaborate with cities, already mentioned by Aya and Jared, and to be more user experience centric. We can provide one KYC for the mass solution at the end, and then reuse this KYC for every operator at the end. So it could be less painful for final user and less costly also for operators.
Yep. Okay. So team, we're out of time here. This has been a lively discussion. I appreciate everyone's input. I urge you all to follow up with all of the folks from the panel. I'm sure they could all be found on LinkedIn along with their respective companies. A lot was done. If I were to summarize, it sounds like the industry's come a long way. There's more that needs to be done. We need more common sense regulation, more solutions where there's partnerships and collaboration. And clearly there is real product market fit with users that love these products. So let's get them in people's hands, and in a way, of course, where companies can make profits and everyone can win. Great. Well, thank you for everyone joining, and look forward to seeing you all soon.